Hi everybody, welcome back. In the last video we discussed break of structure, or BOS, and at the end of that video I told you that within pulse flow we use break of structure in conjunction with something else, and that something else is a fair value gap, and that's the subject of today's video. Now this morning we had an alert within pulse flow that perfectly demonstrates what I mean, and I'm going to use that alert to demonstrate this. So the alert came in 4 hours ago and it was for care into a bullish alert, and as you can see here it said a grade A because our system grades the level of the signal, and a grade A is a fair value gap plus a break of structure. Let's move to the chart so that I can take you through this. Here I've rewound Kia to just before the alert came in as a grade A. You can see the yellow arrow there is the time it came in. And I'm going to let this play just a little bit to show you what happened. So wow, suddenly the price shot up, like out of nowhere, like you're not expecting it. And at that 9:15 here, when this candle started, Pulse Flow said, hey, grade A, fair value gap with break of structure. You can clearly see that this has got a break of structure by going above the previous high. And what do you do now? How do you know where the price action is going to go? So this is where fair value gaps come into play. If you look at the red candle before and look at the high, and then look at the red candle after and look at the low, that's where the fair value gap sits. And if I turn on this indicator, another one by Lux Algo, again, just fair value gap, Lux Algo, it's free, you can put it onto TradingView. You will see it puts a little box, which is great to visualize. So when a price shoots up this quickly, it leaves behind unfilled buy orders within this coin. And the institutions take the price back down to fill those orders. It's called an imbalance. That's what fair value gaps cause. So what I'm going to do here is, because of break of structure plus a fair value gap, they tend to be respected. They're quite powerful, not 100%, but very, very strongly they get respected. I'm going to put on a buy order that says, well, if it comes down into here, I am going to set my stop somewhere here. I'm not sure yet because this is the 15-minute table, so we have time to adjust. And I'm just going to let this play out to show you what happened with this trade. Boom! We came into our buy zone. We took the order. We came into it perfectly. It went up and respected this imbalance and filled the orders. It formed yet another fair value gap on the way up, came back down to pick up those orders, shot back up, formed yet another fair value gap, a third one, came back down and filled those orders, and now it's wondering what to do. Of course, at some point, it will turn back down. Now, this is called staircasing, and it just goes to show you the power of fair value gaps and explains something that I didn't understand when I first started trading. How do we form higher lows? What's happening? Or lower lows if you were going bearish? And it's going back to fill these gaps, to get those orders so that we have the liquidity to go higher. That's what fair value gaps are. So thank you for getting to the end. Please would you subscribe, like and share as normal. And in the next video, we are going to go all the way back to a grade C and explain just how important what we call in pulse flow, GOW, is. My name's Andy. See you next time.